everybody, this is Carolyn, Kiwi Trader 24 from Twitter, and this is a video talking about what we can be looking for as we go into September week 3, 2020. Taking a look at the S&P 500 here. This is a daily chart. Here's what has been going on. In September week 1, we made our all-time high at 35.88, and this was just a 2-point look above, plus 11% on the year. So we got to the 11% mark on the year. That would have been 35.86. We took a little 2-point look above that, and then from there we rolled over and sold off. And here we are at the end of September week 2 on Friday, 9/11, looking down below the 50-day simple moving average. Now I can tell you that oftentimes when this happens, when it happens intraday, we usually break down and really see the bottom drop out of the market. But what we did on Friday was we just took a look below it and we reversed, and we nearly got the daily candle back to green, but the market on close orders were 1.2 billion to the sell side, and we did give back some of that attempt to rally back and closed in the red. And this is the first time we've closed in the red since 2009 on 9/11. So if that's the only reason why we reversed and came back up, at the end of the day on Friday was to save the shame of selling off the market on 9/11, then we can expect some follow through on Monday. That follow through on Monday really ought to be this. We should gap down open below the 50-day simple moving average, or even better, gap down below Friday's low. At Friday's low, we were nearly 8% off of the all-time high. We could then go a full 15% off the all-time high, doubling down this entire move, which would get us down here to revisiting the 200-day simple moving average. I want you to also note that we closed below the halfway back point for the quarter. From the low on July 1st at 31.01 to this high in the first week of September, 35.88. The halfway back point between those two levels is 33.44.64, and we've closed below that to end the week Friday. So that stands to reason that we would be looking back to the low of that range, and that would get us all the way back to 31.01, and you can see that the 200-day simple moving average is moving right into that level as well. If we are only going to go down for about a little 10% move and maybe match this 11% little look above 10% and roll over, maybe all we're going to do is come down here to the 11% mark off at 31.93. So maybe we just take a little look below the 3200 handle and reverse and come back up. Okay, so now we've gotten that all out of the way. That's all of the bad news. Let's talk about the good news. The good news, believe it or not, is that we have an oversold / sell signal overhead with the 10-day simple moving average crossing over and getting ready to cross down through the 20-day simple moving average. When this happens, the market does either one of two things. It either takes it as the sell signal that it is and it sells off, or when it's coming at the end of a long move down like the one that we've already been in, sometimes it treats it as an oversold event, and in doing so it will literally rally right back to this area and try to close above it. If not in one session, then by 2 sessions later. So if this little look below the 50-day on Friday was just that, just a look below in reverse, and we come out of the gate strong on Monday and we start rallying, our first line of defense is going to be at 33.68. That's the halfway back point on the week that we just traded. Right through there, we would go back to the high on the week that we just traded. And you can see that the high on the week here failed right at the 20-day simple moving average, and the 10-day is going to be right here as well. So we would try buyers would be trying to get us up through this. And the phenomenon is that there might be a lot of buyers that are sitting and waiting for this event to happen. And once they get above here, we could be back to the all-time highs before the week is out. Believe it or not, it could be that vast and fast of a move. If we could also come out of the gate rally, look below one more time and fail, and then sell off into that whole move down towards 3100 that I showed you at the beginning of the video. Quite possible it could work that way too. But just keep in mind that even though this is a sell signal about to happen overhead, there is a phenomenon that happens where the market tries to fend it off, and in fending it off, it rallies towards it and closes above the point where those two cross. That's going to be around 34.25 to 34.30. Here's the weekly chart. On Friday, we put in the first back-to-back weekly red closes in a row that we've seen since all the way back here in Q1 of the year, when we were in that sell-off from the all-time high all the way down to 2100. With the exception of this little blip on the radar here that happened at the end of April. But this was more a situation, you can see we were up here in a very bullish state, and then we sold off at the end of the week to come back and close slightly below the previous week's close. But then we turned around on Monday and we were bullish and rallying. So this could set up a little bit like this. Who knows if we're going to have that rally that takes us back up to try and defend ourselves against that 10-20 SMA cross on the daily time frame. We did close down, take a look below the 10-week simple moving average. This is similar to the 50-day on a daily time frame. It's a little bit different of a figure because it uses weekly closes rather than daily closes, but it is the same amount of trading time as the 50-day simple moving average is. So that's a 10-week simple moving average. And you can see that if we were to come in and break below this, it seems obvious we would trade right down to the 20-week simple moving average. And where's that at? That's a rising line. It's at 31.69 as of the close Friday. Maybe it's rising towards 31.90 or so. And that all lines back up with what I said in the first chart that I showed you at the start of this video, that maybe we come down here and look at the 11% off mark from the all-time high, just as the all-time high was plus 11% on the year to get there. Okay, I hope it didn't confuse you going back and forth between a sell and a buy and a sell and a buy, but I'm just trying to give you some information that will give you a leg up and an edge on what to do come Monday based on what you see as we get out of the gate. Hope this video helped you out. If you'd like to join my private account where I do videos like this every week and I publish a daily note and I give all my live tweets throughout the day and all of my trades, you can click the link in my profile and join. Thanks a lot for watching. Have a great rest of your weekend.